If you're a new investor or if you have always deferred to an investment advisor, or you have simply only ever done a target date fund, you might not know what your own risk tolerance is. Personally, I don't like target date funds. I think that they tend to be a little bit too conservative for my taste. I feel like they have way more bond allocation than I would like if I was building one on my own. So I tend to make my own 3 fund portfolio with the allocation that I think suits me. But that's because I started investing initially very passively back in 2007, 2008, when I first graduated college. I have an idea and I have a good grasp on what I like. But for some people who may not know, I am going to tell you of a way that you can find out. So there are actually online tests and online quizzes that you can take to help you determine your risk tolerance. There are a number of them out there. Some of them are associated with financial firms or even insurance companies that sell whole life insurance. I opted not to go with any of those because I figured if they have something to sell you, you have to be very cautious because there might be a bias there. So ultimately, I decided to go with the one from the University of Missouri. Of course, you can pick whatever one you like. And I am going to take this test right now in real time. I have never taken this particular one before. I have taken others. The questions are unfamiliar to me, and the results, I am going to see them at the same time as you see them here. A quiz that is designed to give you an idea of your risk tolerance. There are no wrong answers, just have fun. Clicking on take the assessment. It says, in general, how would your best friend describe you as a risk taker? The options are a real gambler, willing to take risks after completing adequate research, cautious, or a real risk avoider. Before I answer this, I want to say that it really depends on the circumstances. I am more likely to take a risk on something that won't kill me, because if something is completely irreversible, I don't want to participate in it. Depending on some circumstances, I could be considered cautious or even really a real risk avoider. However, I am young enough, I have time to work and make that money back. I would mark myself as being willing to take risks after completing adequate research. Question 2, you go on a TV game show and you can choose one of the following. Which would you take? $1,000 in cash, a 50% chance at winning $5,000, a 25% chance at winning $10,000, and a 5% chance at winning $100,000. I think I know where they're going with this. I'm going to break them down and I'm going to talk through how I'm going to select my answer. $1,000 is nice. Depending on the stage in my life, I might have jumped at that opportunity because that would have sounded like a huge amount of money. However, if I'm gonna bother going on a game show and putting my face out there and going on a trip, I think I want to do better than $1,000. So I am going to axe that answer and I'm not gonna go for it. And then the next answer that I am going to eliminate is the 5% chance at winning $100,000. $100,000 is pretty cool, but it's only a 5% chance, and that's really too slim for my taste. I know that the odds are not just against me, but it's bad odds. I mean, maybe if it was $1 million, it might be worth it, but it's pretty bad odds for $100,000. So really my choices are a 50% chance at winning $5,000 and a 25% chance at winning $10,000. If I'm going to go for it, I'm just going to go right ahead and do a 25% chance at winning $10,000, because that's what sounds the most appealing to me out of the 2 answers that are left. If you went to grad school and you took the GRE or the GMAT, you can totally tell how I'm answering these questions, and that is how I approach every multiple choice question. You have just finished saving for a once-in-a-lifetime vacation. 3 weeks before you plan to leave, you lose your job. What would you do? Would you cancel the vacation? Would you take a more modest vacation? Would you go as scheduled, reasoning that you need the time to prepare for a job search? Or would you extend your vacation because this might be your last chance to go first class? I feel like I know people who fall in all 4 of these categories. Personally, I will tell you right now that the last one, extending your vacation because it might be your last chance to go first class, is just no. Like, that's crazy. Let's not do this. That's giving me anxiety just thinking about it. How are you unemployed and just sitting in first class. I would just be so stressed out. Not happening. Would I cancel a vacation? That's a good question. Now, this one, I am going to answer this. This is not going to apply to everyone. In the state that I live in, the unemployment benefit is 50% of your weekly salary up to $800. I know that in some places you only get 200, you only get 300, but the max you can get here, it is capped at $800 a week. I don't know that I would cancel the vacation because I feel like if I have the possibility of making $800 a week while I look for another job, I don't necessarily have to cancel my trip. I do think that there has to be some kind of balance between being practical and being reasonable. You have to balance that with just learning how to live a little. Canceling the vacation is not going to help me get my job back. There's nothing that says I'm going to get my money back either. The most likely scenario for me is that I would take a more modest vacation. I probably can't get my airfare back. 3 weeks out, the hotel is a toss-up, so I might be able to get a more modest hotel room or maybe plan on fewer fancy meals out or something. So I would go on vacation. I would definitely go, but I would scale it down a little bit because I'm going to need to stretch that 6-month emergency fund that I'm going to be tapping into until I find a new job. If you unexpectedly receive $20,000 to invest, what would you do? Your options are deposit in a bank account, money market account, or an insured CD, invest in safe, high quality bonds or mutual funds, or invested in stocks or mutual funds? This is a great question. I would absolutely not put it in a bank account because these interest rates are atrocious. High yield savings account these days is just a joke. Getting 0.6% APR on a savings account it's just disrespectful. I'm not doing it, not with inflation. Annualized at approximately 7%, not happening. Invest in safe, high quality bonds or bond mutual funds. I would not go with this option either. I don't have a problem with bonds, but my current allocation right now works for me. We have different sources of income, and I think that the nature of these sources of income and the fact that they are from completely different circumstances, I count those as my bonds. I also live in a house where the interest rate is 2.63%. I think paying down my mortgage with such a low interest rate that is quickly getting outpaced by inflation is also the equivalent of a bond. I wouldn't put it in a quality bonds. I would put it in stocks or mutual funds. I don't know how this is being calculated, but I want to say that I'm not a stock picker, so I would probably put it in a total stock market index fund, either in the form of an ETF or a mutual fund, but I would definitely be putting it in the equities market. Number 5, it says, in terms of experience, how comfortable are you investing in stocks or mutual funds? I would say I'm very comfortable. You're not going to see me making videos about put options or covered calls. But I don't think those people are investing anyway. I think those people are gambling. So I'm not going to sell myself short and claim that I am inexperienced or that I'm uncomfortable just because I don't trade on margin. Moving on to number 6, it says, when you think of the word risk, which of the following words come to mind first? There is loss, there is uncertainty, opportunity, or thrill. I wouldn't say loss. The word risk, there's no qualifier in front of it. It doesn't say high risk. It just says risk. We're going to assume moderate risk, and I don't associate that with loss. Loss is not guaranteed, especially if your investing horizon is far out enough. I'm also going to eliminate thrill. I'm not a thrill seeker. The choices that I'm left with are uncertainty and opportunity. I will say that my selection for this one is going to be opportunity. Number 7, some experts are predicting prices of assets such as gold, jewels, collectibles, and real estate to increase in value. Bond prices may fall. However, experts tend to agree that government bonds are relatively safe. Most of your investment assets now are in high interest government bond. What would you do? Would you hold the bonds, sell the bonds, and put half the proceeds into money market accounts and the other half into hard assets? Sell the bonds and put the total proceeds into hard assets. Sell the bonds, put all the money into hard assets, and borrow additional money to buy more. The last one on the list twist where you sell the bonds and then you put the money into hard assets only to turn around and borrow more money to buy more. I am not interested in doing any of that, so that's not going to work for me. I also probably wouldn't hold the bonds. I am more likely to sell the bonds and put the proceeds into hard assets. Number 8, given the best and worst case returns of the 4 investment choices below, which would you prefer? A $200 gain is the best outcome, but you have 0 loss in the worst case scenario. Scenario 2, $800 is your best case, but $200 loss is your worst case. Investment 3, you have the possibility of gaining $2,600 but losing $800. And then number 4, you have the possibility of gaining $2,800 and losing $2,400 in the worst case. This is a no-brainer. I'm not even going to look at the other scenario. Definitely third option right there. $2,600 gain in the best case and $800 loss in the worst case. Sure, you're getting almost twice as much money in the fourth scenario, but you are also losing nearly 3 times as much as you would otherwise lose. And then $200 and $800 don't really move me. Number 9, in addition to whatever you own, you have been given $1,000, a sure gain of $500, or a 50% chance to gain $1,000 and a 50% chance to obtain nothing. I would say the 50% chance to gain $1,000 is much more appealing to me. The other 50% chance, I don't gain anything, but I also don't lose anything. Take option B. I have a 50% chance of getting twice as much money. It's a no-brainer. I'll go with that one. Number 10, in addition to whatever you own, you have been given $2,000. You are now asked to choose between a sure loss of $500 or a 50% chance to lose $1,000 and a 50% chance to lose nothing. I will go with option B again. That is the higher risk option because I have a 50% chance to lose $1,000, but it's $1,000 that I'm losing out of a free $2,000 because I also have a 50% chance of losing nothing. So why not? If you are enjoying this video so far, don't forget to hit the like button so the algorithm knows that it's good. And of course, subscribe for more content. If you think any of the information that I provide here might be helpful to somebody else, be sure to share it with them. Number 11, suppose a relative left you an inheritance of $100,000, stipulating in the will that you invest all of the money in one of the following choices. Which would you select? A savings account or money market mutual fund, a mutual fund that owns stocks and bonds, a portfolio of 15 common stocks, or commodities like gold, silver, and oil. Again, another no-brainer. I will go with option 2. I'm eliminating option A because that is way too conservative and it would absolutely get eaten up by inflation. 15 common stocks, that is not nearly as diversified as it should be, and you are just one stock in the market away from losing it all. And commodities like gold, silver, and oil, how has it compared to the equities market? Number 12, if you had to invest $20,000, which of the following investment choices would you find most appealing? 60% in low risk investment, 30% in medium risk investments, and 10% in high risk investment. Option 2, 30% in low risk investment, 40% in medium risk investment, and 30% in high risk investment. Option 3, 10% in low risk investment, 40% in medium risk investments, and 50% in high risk investment. My answer is going to be purely a factor of my age, how many more years of work I have ahead of me, and that is not an answer that is going to remain constant throughout my life. I will very well change my opinion as my circumstances change, but right now I am definitely gonna go 10, 40, 50. Number 13, your trusted friend and neighbor, an experienced geologist, is putting together a group of investors to fund an exploratory gold mining venture. The venture could pay back 50 to 100 times the investment if successful. If the mine is a bust, the entire investment is worthless. Your friend estimates the chance of success is only 20%. If you had the money, how much would you invest? Nothing, 1 month's salary, 3 months salary, or 6 months salary? Well, let's just say right now that it's not going to be 6 months salary. It's also not going to be nothing because because who is going to turn down the opportunity to make back 50 to 100 times their investment? However, 6 months salary, you have a 20% chance of success. If you lose your job, that 6 months salary really is your emergency fund, so I'm not comfortable with that. I am more likely to go with 3 months salary. Your investment risk tolerance score is 37. Please go to the next page for an interpretation of your score. You have a high tolerance for risk, which is in line with what I know about myself. This was a fun little test that I got to take, and I will post the link in the description box. I will post the link of this particular quiz to the description box. Of course, there are others. If you want to check them out, you just have to Google it. I think it is a fun and informative exercise to help you figure out exactly what your risk tolerance is. We have been in one of the longest bull markets in the history of this country. So it is easy to say, I am going to diamond hand when you actually have not been faced with the choice. So if you want to build an investment strategy that is based on facts and really your own temperament rather than emotions and media hype, I think this is a fantastic way of doing it. And of course, because I always like to hear from you, please leave your results in the comment section below. I would like to continue sharing my thoughts on all things money with you. So I would appreciate it if you could help out the channel by liking this video and sharing it with anyone you think might benefit from it. If you want to see more content, be sure to subscribe and hit that notification bell so you can know when new videos come out. I'll see you in the next one.